In this video, Tasha Keeney of ARK Invest and a couple of the boys discuss the updated Tesla valuation model, which leads to a fair valuation for the company of a market capitalization roughly $8 trillion 5 years from now. For context, Tesla currently about $500 billion. You can do the math on that increase. It's staggering, all on the back of autonomy.
Today, we're talking Tesla and ARK's latest valuation blog for Tesla. We've got the whole autonomous technology and robotics team here today. So we've got Tasha Keeney and Daniel McGuire. Tasha, do you want to just take us right in and walk us through the blog at a high level? And then we'll let Nick, who's been reading Threads posts all day, ask some of the questions.
All right. So we just updated our Tesla price target. We pushed it out to 2029. And we also published our model as we do every year. So users can download it and play with their own assumptions. But, high level, what's different about this versus our last publication? Well, autonomous driving already, we thought would drive the majority or over half of Tesla's value over the next 5 years. Now we think that's actually close to 90%. So ultimately, we think Tesla will launch a Robotaxi service. They have a number of vehicles in the fleet that are Robotaxi capable today. And this will totally change the business model. It changes from, mostly one-time sales of vehicles to a recurring revenue stream, which we think will have attractive margins. So we fine-tuned some of the economics that we think will accrue to Tesla for this platform. And then, we've also learned a ton over the past year on AI, FSD, and we've incorporated all those assumptions here. So that's really the biggest update.
So one of the things that maybe we can dive in here is the probability of or percent of simulations indicating first year of Tesla's Robotaxi commercialization. And so right now we have it at 58% for 2025, 38% 2026, 4% 2027, and then it tails off dramatically. So high confidence in it launching in the next year or two. I know you just mentioned all of the AI developments. What is happening that is giving us so much confidence for autonomous?
Sure. Well, one change to think about is this is, again, we're pushing the model forward, and one additional year that they haven't launched Robotaxi is already behind us. So if you kind of look back over our previous publications, like it's the distribution over when we think they'll launch has shortened. But part of that is really, again, just like shifting the time scale. It's like, okay, well, now we have some time behind us now. So yes, the midpoint of our assumption is next year. The second most likely years in our model, as you pointed out, is the year after that. Daniel, why don't you walk us through like some of the what we think is happening with FSD, some of that confidence?
Just wanted to take a moment here. I'll try not to interrupt too much. Don't want this to be a super long video, but regarding the expected launch date of Robotaxis, if you guys haven't looked at ARK's valuation model, in almost every scenario, the platform launch is either next year or the following, 25 or 26. It's possible ARK could be wrong, but what's almost certain is that investors believe they're wrong by a massive amount, by years, maybe a decade or more. Otherwise, you'd see this reflected in Tesla's market cap. Again, to restate, ARK point out that Robotaxis comprise roughly 90% of their 5-year Tesla valuation, which again is roughly $8 trillion. If sometime in the next year or two, the service that will drive Tesla to more than 15x in 5 years is launching, it's pretty clear that investors don't think it's going to happen, at least not in that time frame. Or they don't think it's going to be profitable, or who knows what else. There's a massive disconnect. That's the point I'm making here. Something's off in terms of perceptions versus what's inevitably around the corner. And look, I think I understand why. Most investors are sheep. Most people are sheep. We saw a great example of this in the last couple of years, and they'd much rather take the wait until it happens approach. But the real returns are to be made when you can anticipate events occurring ahead of time. Autonomy is the reason I'm still buying Tesla stock with every spare cent and haven't stopped. In summary, investors in aggregate either don't believe Robotaxis will happen ever, don't believe that it'll be a highly profitable business, or don't believe Tesla has a lead and will capture a decent slice of the market. I say this because otherwise this will be much more reflected in the current market capitalization of Tesla, which is now just $500 billion. Sounds like a lot, but relative to the potential opportunity for autonomy, bro, again, ARK have Tesla 5 years from now are roughly $8 trillion market cap, almost entirely based on autonomy. And they believe this service, the floodgates are about to open in the next 12 to 24 months.
So as Sam mentioned, 58% in 2025. And if you just kind of step back and look at the progression that's occurred over the last year. So this year, or in 2023, Tesla released version 12.3, which is a move to a fully end-to-end AI model. So as Elon says, it's photons in, controls out. And a couple of months ago, coupling that is that Tesla is no longer compute constrained, which was a big limiting factor for progress of the model. And since that, we've seen accelerated updates. Most recently, version 12.4 has rolled out to select few users and has completely removed the steering wheel nag and now monitors using the in-cabin camera. Then also you had the investor day last week, Elon mentioning that every point improvement, so going from 12.4 to 0.5 and so on, you could get up to a 10x improvement in performance, and they are approaching removing all static object collisions. And interestingly, I thought from the investor day is that the bottleneck has now shifted from compute to more so model validation. So by that we mean that the models are so performant that the Tesla professional drivers that they employ to go out on the roads and test the vehicles have to wait such a significant amount of time for an intervention because they're getting that good. And that kind of makes the models difficult to determine which is the most performant one. So I think when you couple all of that together and then put it aside with the large fleet or data advantage that Tesla has, and they are leveraging that in the model validation. So for years, I know Tesla have done shadow testing, which is where they run the model behind a user driving it, and they can compare that to how the model performs versus what the user does and use that as a method of testing how performant a model is. But all in all, there's a kind of multiple factors at play, but kind of increasing confidence. And maybe if you zoom out at the industry too, last year you had Cruise who were kind of aggressively expanding their cities they were operating in, and then unfortunately had the accident, I believe, in October, and now they're going back to physical testing with humans behind the wheel. Waymo is a leader in the commercial space. They're operating in 3 to 4 cities, showing impressive progress, but measured all the same, and still have a couple of hiccups. I know last week it was reported, I think they had to recall some vehicles after crashing into a pole. And then also you have some Chinese players like Baidu's Apollo Go. But yeah, one thing with these models or these approaches that are somewhat of a limiting factor when you zoom out at the industry as a whole is the issue of scalability. Aside from maybe a more expensive hardware set with LiDAR, radar, etc., scaling could be an issue.
That is the understatement of the century. Scaling could be an issue, will be an issue. And I think it's important to take a moment here. Core to my thesis around Tesla and autonomy in terms of their unassailable lead. They have the data. You are not replicating Tesla's data flywheel. Sorry, but the facts are the facts. Well, unless you've got a spare $250 billion and a magic button to just instantly put 6-7 million vehicles on roads collecting comparable data than Tesla, but then also even more because you need to somehow exceed them because they've already got better part of a decade worth of data collected. So it ain't happening. It's not just that though. It's not just Tesla's unassailable data lead. It's their ability to widely deploy this software to an existing fleet of vehicles. There's no other company that has that either. Oh, and there's a third piece of the puzzle, the generalized solution. Cruise, Waymo, etc. LiDAR encrusted party tricks on wheels. They can't scale because they have to pre-map everything in HD, use expensive LiDAR, spend $100,000+ on each vehicle. In fact, I heard recent estimates of close to $300 a pop for some of these things. So no one has the data, which is essential. No one has the data flywheel, which is essential. And no one has a fleet. Plus, no one has a generalized solution other than Tesla. What Cruise and Waymo are doing is extremely brittle and can't scale quickly. It's not generalized. It's not intelligence. You can't drop one of these things anywhere and it looks into the world and goes, oh, I know what that is. I know how to drive here. I've seen that before. Because what Tesla's developed is AI that generalizes and internalizes concepts of how to drive well, as opposed to Cruise and Waymo. It's like training a dog to do a trick. You can train a dog to look like it's counting and providing you some simple answers, right? Figure out which ball to tap this for 1, 2, and 3. But it's a trick. And that's what Cruise and Waymo are doing versus Tesla. Hard to scale is the understatement of the century. And in order to catch up to Tesla, to have a chance at eking out a share of this market, as opposed to Tesla just taking the lion's share, you need the data flywheel. You need the existing fleet collecting more data. You need the scale. And you need a generalized solution that can be widely deployed rapidly. Good luck.
In terms of their approach, because a lot of them are geofence. So all of that said, we're becoming increasing confidence in Tesla's ability to deploy a robotaxi network. They've dropped a number of Easter eggs in their recent announcements, the ride hail renderings in the Q1 call, and then at the end of the shareholder meeting, a video sample of how it could operate. And yeah, that said, we're pretty excited for the Robotaxi announcement in August to see any more tidbits we can gather from that.
I want to lob in a segment here. Sam, you brought up threads. I just pulled threads up. I searched ARK. I want to read one of these and then have you combat it. It's made in jest, clearly, but I think you can riff off of it and explain the actual utility and how we think about the Robotaxi rollout. So I will do a dramatic reading. This is preferenced as ARK's investment thesis for Robotaxis. Robotaxis will pay for themselves, so everyone will have one. And because everyone will be using their cars as Robotaxis, they'll need to use Robotaxis to get around, which will create more demand. So people will buy more. You'll be using your neighbor's Robotaxi to go everywhere, and they will be using yours. As a result, you'll be paying for each other's car payments plus profits. This will allow all to retire off their Robotaxis, paid for by each other. Econ 101.
Yeah, well, Nick, I think I saw you post that yesterday. Maybe I think to distill that question, Tasha, to you is, we've spoken to people where it's like, okay, even if they launch, what are the unit economics on this? Because I think that gets to the heart of that jest and saying,
yes,
why is this a good business? And what are the key drivers there?
Yeah, well, I'd actually like to address one thing. So, Tesla's been focusing a lot on users signing their car up for the network. And I think that is important, and they want to incentivize people to do that, because I think the way that they will launch is they already have a fleet of cars with drivers behind the wheel that they're using for validation. They'll likely add to that fleet. They can take Model 3s coming off of lease to seed the network in specific cities, basically get enough cars on the road so that you're not waiting forever to get a vehicle. On top of that, they want to incentivize Tesla owners to potentially sign their vehicles up. And you can imagine that this is, okay, they don't have enough cars in one particular city to launch it well, and they want to add some more. I don't think that long term that is going to be the majority of robotaxis, these personally owned vehicles that are signed up for the network. I think it'll be important in the early years. I think long term, it's going to be other companies that house and maintain the cars, and they likely won't be on Tesla's balance sheet.
So regarding personally owned vehicles on Tesla's fleet, I agree long term, they've got to be a tiny, tiny, tiny percentage of the overall robotaxi fleet. Whether Tesla owns their own fleet of dedicated robotaxis or commercial partners or independent business owners, I totally agree. Long term, most of Tesla's robotaxis operating globally will be dedicated robotaxis not owned by individuals for their own use. However, the ability for Tesla owners, existing owners, to add their vehicles to the fleet as they wish is going to be a brilliant strategic move for Tesla, because it will allow them early days to hit scale. In addition, these vehicles can help plug gaps. If on the 8th of August, Tesla unveils a dedicated robotaxi, a 2-seater vehicle, which is pretty likely, or an extremely compact 4, but I think it's probably going to be 2, and maybe a high-density van as well. There will be some users who want to take a trip, a family who don't want 2 seats. They want 4, 5, maybe even 6 or 7. In that particular case, for the rare trips that require more than 2 seats, which is the vast minority, again, look at the data, there'll be enough Tesla Model X's, Model Y's, Model 3's, Plaids, and so on in the fleet to meet that demand as well. Meaning Tesla doesn't need to develop a dedicated vehicle for every possible instance when they know that there'll be enough users at scale from their existing fleet to help smooth over some of those edges, to plug in some of those gaps. And this is really important. And I completely agree long term, the percent of personally owned vehicles in Tesla's robotaxi fleet versus dedicated robotaxis, either owned by Tesla or businesses operating their own fleets, it's going to be a drop in the bucket.
I do think that is one important distinction, because I think often people think of it and they think, oh, well, that's like kind of complex, and, you have to sign your car up. Who's going to want to do that? I mean, we think that there will be economic benefit to doing so. Elon said that you could pay off your car with it. Basically, the way that you can imagine this working, we have a blog on this, is that when you're not using your car, which is, by the way, most of the time, people use their car less than 5% of the day. The rest of the time, it's just sitting there, and it's something that you already paid for or are leasing. So the other 95% of the day, imagine that you tell the network when you're not using your vehicle. It drives out of your driveway or, your work parking lot, and picks people up. Tesla has said that customers that do this will get a hefty portion of the per mile fee. It's, we'll see exactly how the economics shake out. But the business model is charging people per mile for this ride. So if you drive 5% of the time, but the car gets over a 50% utilization rate, just theoretically, imagine like 45% of the day, it's collecting revenue for you, and it otherwise would have just been sitting there. It does seem like a great benefit for people that are willing to do that. And again, it becomes like a recurring revenue stream on something that was previously just a stranded asset. But again, that might not long-term be like the majority of what we see.
I just want to take a quick moment to explain some of the economics, using some rough round numbers. First of all, a typical taxi operating full-time does roughly 50,000 miles per year. That's a lot, obviously. It's much higher utilization versus a personally owned vehicle that spends most of the time sitting in a parking lot, garage, etc. So let's be extremely conservative and not use 50,000 miles, but just give the example of somebody who actually owns a Tesla and occasionally contributes to the fleet, maybe while they're at work, a couple of days a week or whatever. Let's just say it's doing 10,000 miles, right? 1/5 the amount of the average taxi. So just extremely, extremely ultra part-time, occasionally picking people up, dropping off, 10,000 miles. And let's just say that these things are charging $2 per mile. So 10,000 miles per year. An ultra part-time Tesla Robotaxi that somebody just sends out occasionally, maybe just during the week, not on the weekends, whatever, maybe just for Saturday nights, who knows? At $2 a mile, 10,000 miles is $20,000 in revenue. And obviously extremely high margin revenue, because what are the costs? You've got some energy and a tiny bit of maintenance, but it's bugger all. So imagine that your Tesla vehicle, ultra part-time, could go out and bring in $20,000 of revenue. Now, what's your share of that? Maybe it's 70%. Which would be about $14,000. Let's assume you've got a couple of $1,000s in costs. Worst case, that's still over $10,000 that your vehicle brought in for you completely passively without you having to do a thing. Now imagine you bought that thing for $40,000 and every now and then it's operating in the fleet. 4 years later, it's paid for its cost entirely, and every year after that, pure profit. And this is extremely conservative assumptions. If it was doing 25,000 miles, roughly half what a typical taxi does, so it's kind of half-time, part-time, not ultra part-time, can more than double all of those numbers. I think it'd pay for itself in less than 2 years. Outrageous. So this will be an extremely lucrative proposition for existing Tesla owners if they're willing to put their vehicle into the fleet. And this is 400 IQ stuff from Tesla because it's going to help supplement the cost of owning a Tesla vehicle. You can't afford a Tesla? No worries. Lease one from us, operate it as a Robotaxi part-time, and it will more than cover the lease cost, the payments and the maintenance. And now you've got a money printer that cost you literally nothing. I mean, who's going to say no to that? The answer, of course, is people who are dumb. And there's a lot of them, let's be honest.
That initial incentivization will be for current owners, because there's also, I guess, a consideration of who Tesla's customers have been. And it's been, higher income households that may view this as a potential burden relative to what it could spit off for them in the early days, as in, the risk of putting my car out there on the network, it gets dirty, whatever you come up with as a reason not to do this. How exactly do you think you can incentivize a user? Like, I have a car, I would have some hesitations of just, at least at the beginning, putting it out there until I saw.
Yo, Nick, I'll take that question. It's called money. A lot of it for free, for doing nothing. Now, this is not going to be for everyone, but bro, if you're a young family, a struggling household, money's tight, you really need to budget, and you have the option of sending your vehicle out, or one of your vehicles, to print money for you, make 5 figures a year in profit passively for nothing. Literally just, you got the vehicle sitting there anyway. Would you like to send it out in exchange for a tiny bit of inconvenience or maybe some hesitation, whatever drunk person vomits in it and so on? That's the incentive, the money. Now, Tesla also mentioned that you're actually going to be able to restrict who can use the vehicle. You could potentially restrict it just to friends and family, or just to 5-star rated passengers. So there's going to be a lot of control over this to help people with their hesitation. But again, it's not mandatory to add your vehicle to the fleet. It's just, geez, would you like the thing to make mountains of money for you passively, for free? I mean, at scale, full time, a Tesla Robotaxi at $2 a mile, doing comparable miles to a taxi, could be doing about $50,000 a year in revenue. There are fast food workers making less than that, and they have to exchange their time for the money. This thing, no time exchange required.
How it would all unfold.
Yeah, well, so I'm going to tell you said it's mostly higher income households. I mean, the model car was the best-selling car Model Y was the best-selling car in the world last year. And actually, Daniel, maybe you could cut in. You've done a lot of analysis on the price. Like, what do Teslas look like compared to the average car?
Yeah, sure. So in terms of price, you mentioned the higher net worth individuals, but if you look at the cost declines over the last couple of years, they're becoming increasingly more affordable. As Tasha mentioned, the Model Y, best-selling vehicle in the world, and then also the Model 3. With the EV incentive in the US, and I know there are other EV incentives, it gets a pretty cost comparative relative to traditional gas cars. So I'm not necessarily sure whether I would agree on that. And even looking forward, in terms of the next gen platform that Tesla have spoken about a lot, there's rumored to be kind of a stripped down Model 3 or Model Y, roughly rumored to be at around a $27,000 price. And importantly with that, it significantly increases Tesla's addressable market, maybe upwards of 3x the amount of users that could potentially purchase a Tesla. And then
again, this is important. An incremental decrease in the purchase price causes an exponential increase in the number of people who can afford them. But again, back to the point, this can supplement your ownership cost. I guarantee either Tesla, and if not Tesla, I don't know why, maybe just because they can't be fucked, or other companies that have brains will think, wait a minute, we can finance these things. We can set up a lease program and factor in income from these vehicles as robotaxis toward the repayments, meaning people who potentially don't even have the credit or the income to service the repayments on a lease independently can still get these things because we know that they're going to operate them as robotaxis. Think about it. Imagine you can buy a Tesla, $30,000 a few years from now. If it's doing 25,000 miles a year, again, roughly half what a full-time taxi does, at $2 per mile, that's $50,000 in revenue in a single year, assuming relatively high profit margins, because the operating costs aren't going to be that high, just a bit of energy and a tiny bit of maintenance. It could literally repay itself in a single year. Of course, that's not how a lease would work. It would most likely be a 5-year lease with payments spread out. This is going to be an absolute bonanza. And of course, this is 400 IQ stuff from Tesla, like I said. It's in line with their mission. They want more electric vehicles doing more miles because that helps accelerate the world's transition to sustainable energy. One way to do this is to help supplement the cost of their vehicles. So even at a $30,000 price point, all things considered, if it can operate as a robotaxi, it's basically free. The no-brainer of no-brainers.
And with that gets into the lower income bracket who potentially would see this as an alternative passive source of income. Like Tasha mentioned, if your vehicle's sitting there only for 5% of the week, you use it only for 5% of the week, it's kind of a no-brainer to earn income from it when otherwise it would just be sitting there.
And I think the other element is, right, with the camera in the car and user profiles, it's like there's high ability to rate both the passengers as well as the vehicle itself. And so it's like, you don't want to, if you trash it and get banned from using the cheapest, most widely available transportation network, that seems like a pretty big disincentive. But I do want to circle back because Tasha, you touched on the element of fleet owned versus human aided, like Airbnb type model. And that ties into some of the unit economics. And then there's the utilization, which ties into the top line of the unit economics. So maybe can you just quickly clear that for us? In short,
I mean, the reason to do this is that you're getting paid for it. So, okay, your car, driving your personal car today in the US, it's cost you something like 70 cents to $1 to do so. But if the car has a higher utilization rate, and by the way, that's the average personal car. So actually, Tesla's going to be even lower than that because they're an electric vehicle. We know from Sam's work, they have a better operating cost per mile. So you up the utilization rate in the car, it's going over more miles. You're now spreading some fixed costs out over that mileage. Imagine the cost per mile to drive goes, 25 cents or below is roughly around there. But, you're able to charge maybe Uber-like prices at first, or even if you're undercutting Uber. So Uber is $2 to $3. I've seen closer to $3 per mile lately. But imagine you're charging $1. You're making up the rest of that. $1 minus say 20 cents per mile. So if the car travels, Elon has said something like 5 times the utilization rate of a personal car, that would be like 70,000 miles per year.
And again, moments ago, I gave some examples. What if it's doing 10,000 miles or 25,000 or even the most extreme case, 50,000 miles a year? The potential here is ridiculous. And it is important to understand that unlike Uber and Lyft, in terms of cost structure, you don't need to pay a human driver. So in theory, you could massively undercut on price and still be extremely profitable.
Versus like under 15,000 miles per year to you as the user normally. You're taking that mileage, you're multiplying by the delta. So yeah, it could be a meaningful income stream for people that are able to do it.
All right,
Charging.
What are your what charging?
I brought this up. I think I brought this up last time, and I think the response was they're developing like a snake charger, a robotic snake charger, but those haven't been rolled out. So do you think in the 8.8 presentation we get some development on the charging front, or are they just going to put charging attendants at these locations so that cars can come in and charge?
So let's take some bets, folks. What are the odds that the word Optimus humanoid robot will occur in the next 20 seconds in the response? I mean, bro, this is some low-hanging fruit right here. How difficult is it for a humanoid robot that's already doing incredibly complicated tasks, moving battery cells in a Tesla factory, put him into a pack, and improving at a rapid rate? How unlikely would it be that Tesla's not thinking about humanoid robots, if necessary, at Tesla charging stations to plug in and remove plugs from Tesla Robotaxis? I mean, come on, bro. Lowest hanging fruit of all time.
Charge themselves.
Yeah, I mean, they have the supercharger network now, so you can imagine that they don't necessarily, at least to start the network, they don't have to build out infrastructure. Certainly longer term, it seems like maybe the way that a personal driver charges will be different than a fleet. So you could change that infrastructure, or the way that they choose to build it out incrementally now could look different.
Well, they need the infrastructure to connect the actual charger to the car if there's no one there to do that for them.
Well, I'm actually talking about just the charging piece itself, because that's important too, right? So I think, yeah, they could in the short term have attendants that charge the vehicles. So
yeah, I would just add they've also invested in some wireless charging companies. And you can say, one of the downsides of wireless charging has been efficiency. But if it is for autonomous and it's at scale, you might not be as worried about fast charging if it's during downtimes. Could be a fun test case for the Optimus team to try and tackle as well. Mm-hmm. And then exactly what Tasha said, where it's like, if you're going to start, just put a person there.
Okay. Nick,
are you bought in? What else? What else?
I need to see the 8.8 announcement, because I think there are. I'm bought into the long-term vision. I believe that this is going to happen, just time-wise, and these little hurdles and bumps in the beginning may not seem like you can overcome them, but you still need to do that in the beginning. And to roll it out, and then also to attract enough users directly to an app that gets more into the direct to consumer services business, which is a nightmare in and of itself. So there's a lot of things to consider more on the short term in how they roll it out, and that's why I'm very curious to hear how they approach it in August.
Yeah, I think it's not trivial. I mean, they already pioneered in the auto industry a direct-to-consumer model, right, in terms of sales versus going through the dealership. This is different than that. There's certainly components that they need to set up that aren't all there today. But I do feel like we're hearing incremental progress. Daniel mentioned like some of the app renderings, like the videos that they're showing. We also heard during the shareholder meeting them talking about how a remote operator network would work. So if the car messes up, how do humans, in a command center intervene in those rare scenarios to help the car? So it sounds like they're putting more work into that back end. And essentially the bet we're making is, while that back end is not nothing to set up, it is an easier problem to solve than getting the car to drive itself.
I'm kind of interpreting some low-key savagery there. Yes, no shit, Sherlock. Nick's like, some of these things will be difficult. Yes, but relative to actually getting the vehicle to drive itself. Yeah, I think Tesla's got this covered.
Yeah, another question, and again, more short, call it maybe even medium term. I think about what Uber and Lyft did to the yellow cab industry in New York City, but then I fly into New York City and there's still plenty of yellow cabs. And, oftentimes what will happen is you go to Uber or Lyft at the airport and you say, 12 minutes, there's, a line for yellow cabs, and I think they've standardized it on like $50 to get into the city from LaGuardia, I think it was. And so I'm wondering if it, is so disruptive that all of the human ride hailing goes away, or it just gets a large portion of the market and part of it remains.
Well, Nick, they're still there, but the value of a taxi medallion is
of course,
almost
yeah,
nothing.
No, of course,
So it's like,
of course. No, there's value, and then
yeah.
utility of the underlying, and there's still a value ascribed to medallions, but it's not anywhere near its all-time high, but it still exists.
Mm-hmm.
And that may, go away over time, but I'm just, what does that timeline look like in reality?
Yeah, I mean, I think we expect autonomous driving to be with integrated traffic, so with human-driven traffic when it first rolls out, and then longer term, people still ride horses, but so you see a lot fewer people doing that on the road today than you did before the automobile. So I think that human driving will look like that eventually, not over the next 5 years, but sure, over decades to come, it'll just be rarer and rarer.
Yeah,
and less safe ultimately.
Do you think there's also an element here of, I feel like the car industry or ownership of a car is a way to express yourself as an individual? And I'm just wondering, maybe this is more US centric, if, over time, are people actually willing to forego owning a car for robo-taxi usage? I just, there's a large part of the US that is like absurdly attached to their vehicle. Like you have the Jeep Wave and Ford trucks, and everyone is like, I'm a Ford, Chevy, or whatever it may be. Even Tesla, right? Like you're a Tesla, I'm a Tesla owner. Like it becomes a part of your individual brand identity. And maybe it just shifts, like I use the Tesla network, or I mean, I guess that does happen today, right? I use Uber, and someone else is like, no, I use Lyft, and it's like you become very definitive in your usage. Maybe not as much on the services because people just look at price comparisons. But I think car ownership is very uniquely expressive in the US. Like people put rubber duckies on their Jeeps. It's so interesting to me.
Yeah, I love that question. It's like, because, if you go back, automobiles come out and then you have like highway access all of a sudden. And the idea of the automobile is freedom in the US. And it's like so meaningful. The thing is that, culture, I think cultural attitudes, but even if you just look at that, the data has actually been changing over the past decade or two. So we see fewer people getting their licenses when they are of age than were previously getting them. And we're actually already seeing evidence of young people moving to urban areas and they don't need a car because they can just use Uber and Lyft. So I agree with you that it's like there is a subset of people that do that. But again, it's like, they're horse lovers too. I go back to that analogy. And maybe that's what it'll look like in 20 years.
I think Tasha has just spat some facts. Obviously, there are some people whose identities are completely tied to and entirely revolve around the vehicle they drive, the brand they drive. They may be some of the last holdouts. However, a couple of decades from now, I think people who still cling to their desire to drive their own vehicle for whatever reason are going to be looked upon with the same curiosity and intrigue as those who you'll occasionally see driving around in a horse and buggy. I think most of you might be familiar with this chart. Tesla's stock since IPO with a current market cap about $615 billion. Now, why am I wrapping up with this? Well, I've taken the liberty of extending this Tesla stock price chart to represent what it would look like if Tesla stock, aka the value of the company, reaches ARK Invest's expected fair valuation for Tesla 5 years from now in 2029. Shall I show you guys what it looks like? All right, we're just got to scroll across first of all, and well, now we just scroll up and up and up and up and up. There we go. Now I'll just zoom out so it all fits together for you. That's what it looks like. I'm not fucking kidding, by the way. $2,600 a share, same scale in terms of years and dollars per share. That's what it looks like. Obviously, this is a very small opportunity that you should most certainly ignore, which is why I don't talk about it every fucking video. For 1,500 videos in a row. And why I'm still not buying Tesla stock with every spare cent. I mean, what a terrible return. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going, plenty more to come. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game has improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.